Everyone, just so you know, I'm Tim Dimitri. I'm from PencilPay, and today we're presenting the third installment of our Pencil Presents series. I'm not sure if any of you came to the first or second installment, which we did alongside Waypoint last year. But if you don't know the format, what we do is we spend around 15 minutes or so just trying to make sense of some key industry trends, followed by anywhere from kind of 10 to 20 minutes of Q&A, depending on how many questions that we've got. And we just have a bit more of a discussion, a bit more of an open forum. So if any of you do have any questions, please feel free to pop them in the Q&A box. You'll see that at the very bottom of the Zoom window. And we're going to cover all of that off at the end. And feel free to ask questions throughout. As soon as they pop into your head, just plug them in there, and we can answer them at the very end during the question session. So today we're presenting with Matt Grant, as I said before, from Waypoint. Say hi, Matt.
Hey, how are you all? You all know me, so
hi. And I don't know if you want to say a few words, but
yeah. Look, a bit of context, right? So, as some of you would be aware, I do a lot of the scoping, or actually all of the scoping, when someone comes to us and says, "Hey, we're looking at putting in a new system and whatnot." And so we cover off all these different bases, and one of the bases that we discuss is payment terms. And when we get to that topic, it's always one of two sort of things get said. It's like, oh yeah, we have standard 30, 60, 90 or no terms. Or it's like the air gets sucked out of the room and everyone sort of says, oh yeah, we're changing our terms, or we're taking people off terms, or we're tightening our terms, or we're loosening our terms. And what we found is that can be very reactionary. And not often, when you interrogate it a little bit further, has there been like a really strategic kind of set of decisions made around what a company might do with their terms. So given terms have to do with being paid, I got in touch with Tim and the team at Pencil and just sort of said, hey, look, I know you guys are always monitoring what is happening in the industry, and we're seeing a lot of sort of like people wanting to tighten their payment terms up. Have you got any insights? And Tim sort of said, as a matter of fact, yes, I do. So we thought maybe it would be really useful to make that the topic for this series, and share just some of those industry insights with you, because it might give some context to what you're seeing within your own business.
Mate, that's terrific. Thanks so much for that. As I said, Tommy will just share the screen with you. Just let me know once you guys can. Yeah, terrific. So we can all see that screen.
Yeah.
Awesome. All right, terrific. So a little bit about us. I'll just really cover off about 30 odd seconds on us. So as I said, like along with the industry trends today, we're going to present to you a little bit of more info about payments and how you can actually make the payments work for you a little bit better. A lot of people don't know a huge amount about payments and the flexibility that they offer. So we just want to show you how that works with Cin7 and Xero. We are a payments and trade credit management platform, and we help product sellers like yourselves take control of their wholesale trade relationships. Now, this includes everything from fast applications, so digital credit applications with a stored billing method, as well as company verification and director verification, through to really fast approvals, so you guys can automate the processing of the applications with the pass-through with the data directly into Cin7 and Xero, and also all the relevant checks with the ASIC around the company details. And then there's really two different core types of payments. You've got prepayments and post-payments, which is just on terms. So prepayments, just if you guys either take quotes or if you guys take a deposit on a quote or an order, then we provide you the ability to take a fractional deposit, 50%, 25%, whatever you like, as well as being able to take the prepayments in a matter of seconds from a stored credit card or a stored bank details, as well as being able to take an automatic debit from any of those customers that have signed up with a payment method using the Pencil onboarding. All right. So that's a really, really brief piece on us. We'll cover a bit more at the end, but I want to get to the agenda today. Now, what we're going to cover off, there's really kind of I guess, 5 or 6 key items. The first being the current trends and conditions in the industry, as we spoke about. We'll do a bit of an industry health check, just to see how it's going, how the general B2B wholesale industry is going currently. We'll cover off the economic effect that we've seen in the last. It's really the last 12 months. We've just seen this kind of a real steady state. It hasn't been a ridiculously positive steady state, but it's a steady state either way. And then we're going to cover off this credit squeeze that we've seen, and due to a number of different reasons. We'll cover that off with you guys. And then a couple of opportunities that presents. And then what we'll do finally is show you how to establish best practice and really just get yourself to a position where you feel really comfortable handing out payment terms and you feel really comfortable that you're going to get paid on time. So we'll go to the next slide. Thanks, Tom. All right. So this is covering off a bit of an industry health check. So what I wanted to do is start by running through the 4 key indicators that we feel really define the health of the B2B wholesale trade sector. So the first is how much a business is spending. The second is how many businesses are actually paying their bills on time. Third being how many invoices become bad debt. And the fourth being how many businesses are ceasing to exist, i.e. going into liquidation. Now, initially, I want to go through 4 key indicators. This is the first. So clearly businesses are spending less. So as you can see on the chart, there's been a 40% decline in average monthly revenue across B2B sellers since 2019. Now, depending on the industry that you're in, I know that will change up and down, but there's been a significant drop in the overall business. There's been a much lower average invoice rate, and we're seeing that across all of our data as well as the broader industry data. What we're seeing is a higher percentage of invoices that are actually falling overdue. So this is up from 35% to 47% in the last 12 months. And then the bad debt across the industry rose to 7%, up from 6%. Now, this clearly doesn't sound like a huge amount, but it is a 15% rise either way. And that is a significant, 1% is a significant amount of money, as you guys know, in your own businesses. And then lastly, the external administrations. So they have really skyrocketed. So they're up 50% since 2019. So it's clear that there's that path through, 2021 and 2022, where the government wouldn't allow businesses to go into liquidation, but you just see a steady incline all the way through from 2019. All right, so what effect is all this having? So you can see that 75% of businesses said that they bridged cash flow issues with their own money or their own finance. Now, that's even with the rise in interest rates, and 53% of companies spent extra time and resources chasing unpaid invoices. Now, you guys know from your own businesses, this is something that just continues to rear its ugly head, is just this constant battle to get paid on time. Now, the next thing I want to cover off is this credit squeeze. So as you can see, this is this chart is all over the place, but it tells a very interesting story. So there is a reason why all of the stuff that I've covered is happening, and it's not just the standard market fluctuation. So this all relates back to, we can go all the way back to 2020 and 2021 to find out what the hell's going on here. So after the initial COVID shock in March of 2020, the Reserve Bank dropped their rates basically down to zero, and the Fed blasted 300 billion into the money supply within a 6-month period, which they've never been done before. Clearly, money was very cheap, and the public started spending way too much. One problem is all this money never found its way into the cash registers of bricks and mortar businesses and onto their wholesale suppliers or B2B suppliers, being you guys. Now, you got to think about it. If a supplier is selling on 30 days and then customers stop paying, or a certain portion of customers stop paying, the cash reserves get depleted slowly. Then as soon as you need capital, interest rates begin to rise, capital becomes much harder to come across, and you've got a perfect shitstorm. So what does all that mean? It means that you guys as sellers, you're going to tighten up. You're going to stop providing extended payment terms. You're probably going to start to enforce payment prior to dispatch. And how do we know that all this happens? by the reaction. So the reaction tells us that suppliers are just giving less credit overall. So this year, 41% of all B2B sales have been on credit terms, which is down from 57% in 23. And the average credit term has decreased to 23 days from invoice compared to 37 days from invoice last year. And we're seeing suppliers really kind of going into their shells a bit, and the amount of available credit declining, and that brings along with it a slide in revenue as well, because buyers just buy less when they're not provided terms. Now, let's talk. This is the last kind of negative, which is our customers' priorities, and this, I guarantee you, it'll be the last one. So there's a priority 1 to 4. Now, number one, they're always going to pay their rent, or else they're not going to be able to operate. The second piece is they're going to pay their staff. Thirdly, they'll pay business loans or credit cards because they're registered with credit bureaus and they could get a negative credit rating. And lastly, unfortunately, they're going to pay you guys. And that's just the way it operates. So we need to find smart ways of being able to go up against that. Now, as I said, a lot of that's negative. So we're going to present some positives, and we're going to kind of outline this is a huge business opportunities for suppliers that are smart about it to be able to support their sales reps by giving them the opportunity to offer better terms. You obviously just need to make sure you can actually get paid. Now, there's really 3 core options. The first is going down the path of using a credit bureau. Now, clearly, credit bureau, most of the credit that's registered out there is a loan that's between anywhere from 2 years to 30 years. Now, this is not ideal because it tends to be completely opposite to what you would have in a business. A business is usually, when they're giving trade credit, anywhere from 7 days to 60 days. So it doesn't really comport with that, longer terms that you would see registered with a financial institution. So again, credit bureaus are not going to fully protect you. The second option is trade credit insurance. Now, Deloitte tells us that over the last 5 years or so, the cost of trade credit insurance has skyrocketed. It's up 6% average per annum, and that is expected to continue. So unless you're charging significant interest on the stock that you're handing out, trade credit insurance becomes very unaffordable. Thirdly, and this is the option that I want you to start to think about, is the small and medium lenders. So you think about Prosper and Mueller and those kind of businesses in these markets. They have really smart systems and good technology that provide you a really good balance of control and enforcement. Now, they'll give you a fast, easy application process, which automates all the credit and company checks. They capture a guarantee, and that might be a personal guarantee or or up against an asset. And then thirdly, they collect and store a billing method or a direct debit request and which debits the funds out of your bank account on a frequent basis. That could be daily, weekly, or monthly. So what's the point about those is that option 3 for you guys is by far the most economical and the best way forward. So let's look at how this is how lenders give credit, and this is exactly the way that we have structured our platform, which was actually built off the back of looking at all the SMB lenders and seeing the best way that we could almost mirror them, but in a trade credit context. So quick applications. You can complete it up. Your customers can complete a pencil application in, really about 2 to 5 minutes with automated company checks and identity checks. You can approve them fast. So robust credit analysis supported by real bank purchasing and payment data. And then also with credit checks through Equifax, and then set repayments. So you can capture the bank or credit card details during the application process to ensure that every time that a payment is due, you can automatically debit that from the customer's bank or card details. And that all folds into an easy reconciliation feature, which you click one button every day and it reconciles all of your invoices. And Lastly, again, I'm going to be really, really quick through here because we can probably cover a lot of this off in the questions. Actually, you know what, Tommy? Let's go directly to the questions. I've been talking enough, I think. Um, Sorry for all that yabbering, everyone, but that's kind of where we're at now. We did have some questions. Matt, have you got anything that you want to cover off for now?
Yeah. So I've got a couple of questions, particularly around how it all kind of works and
Sure.
whatnot, because I can kind of preempt some of these because it's the stuff that comes up in scoping. So if you could cover, I guess, like how you actually manage that collections part in your system, that would be really good. And then maybe segue into how you store the card information and how that
Hmm.
applies to the payments.
Yeah, sure, sure. Yeah, so there's a couple of items to cover here. So if you think about collections, we automatically integrate with your Zero, which will have all of your accounts receivable in it. What that does is it allows for all that data as well as due dates and the amount due and all that type of thing to sync across. And then we've got a number of ways that you can collect funds that are overdue. All right. The first is via auto charging from a stored bank or credit card details. Now, usually that'll happen on the due date, but that's one option. Secondly, you've got payment plans. So you guys can automate a set of payment plans to send off to customers with a link, and that allows you to set the number of transactions that you want as part of that payment plan. So it might be, 4 payments over 4 weeks or 10 payments over 10 months, whatever you like. Then you've got the ability to pay over the phone. So if you're on the phone with the customer, you can choose to process their card details over the phone and then store their card details at the same time. And you can also, your customers can also do bulk pays from our invoice reminders. So you guys might have a statement that is due, which has multiple invoices owing. That being the case, you can send off the statement using Pencil as opposed to any other system to do with Cin7. We give you the ability to click on one link and pay the entire statement, or your customers pay the whole statement in one hit, which again, Xero doesn't allow for that. It just saves a hell of a lot of time, and they can pay those invoices in bulk and they can be reconciled in bulk. Your other question was about stored card details, was it?
Yeah, just
Yeah.
how does the stored card information get applied to the payments? You may have answered that actually.
Yeah, I can probably cover off. There's one area that a lot of people have questions about, especially with stored card details, and that is, people many people have a concern about fees and that type of thing.
Yeah.
Card processing fees. Now, if your customer wants to pay by card, what we always say is that you should give them the option to either pay by card or by a direct debit. Now, card is more expensive than direct debit. So as long as you're giving them a choice of which payment method they want to choose, what you can do is through Pencil, and we're the only Cin7 integrated partner that does this, is give you the ability to be able to on charge or split the transaction fees with the customer at the invoice level. And
That's good.
you can do that with card, and then you can choose to absorb it if you're offering direct debit. And what that means is that you guys are absorbing a tiny fee for direct debit and you're on charging the bigger fee, but you're still giving the customer options and choice. And that's the key.
Yeah. Um, have you found that there's much resistance at the customer end to storing card information or bank details or anything like that?
Not really. So the way it needs to be seen is we find that a lot of the time that um, as long as you have the right process in place to be able to collect and store that payment method, then customers have no problem with it. I'll give you a bit of background on the whole reason why I started the business in the first instance was I owned a venue, and my venue had 30 suppliers. Those 30 suppliers, I knew that there was probably five or so, like for example, I had a fruit and veg supplier and I had, some bigger alcohol suppliers and that type of thing. With those guys, I wanted to manage the payments myself. But with the other 20, I just wanted to put my credit card down and for that to be just debited because they were just, they weren't the biggest invoices in the world. However, no one offered it. So the whole reason why I started it was because I wanted a faster, easier way to sign up with all my suppliers, and I wanted a easier way to manage the billing across 25 suppliers that weren't my biggest ones. So that's really the concept there. People do want it. We've found that the increase in adoption across the whole customer base has increased by about 15 or so percent. We used to get about 60% of every customer that filled out a credit application form used to enter a payment method. It's now about 77%. So it has, it has significantly increased. A lot of that's due to COVID, but yeah, it's gone right up.
Yeah, well,
Is there any other? Yeah, sorry, mate. Go on.
Yeah, just one more. I was just going to say to everyone in the attendees list, if there's a question that you've got, yeah, don't wait for me to ask it. Jump into the QA box at the bottom of the Zoom window, type it in there, and we'll answer it. But I'll preempt again what I think some of you might be wanting to ask. So if you've got customers that are paying over the phone, or like via a rep or something like that, how do you do the prepayments? How would you handle prepayments there? Like, do you have to do that with the Cin7 B2B portal, or yeah, how's that work?
That's a really good point. Thanks for bringing that one up. I completely forgot to talk about that one. So what we find is that as a seller, you might have an e-commerce platform. Maybe you don't. So often what we find is e-commerce platforms is much more suited to a business that's B2C. B2B businesses often don't have them. So that means that if you've got people out there that are not paying through a B2B portal, that are not ordering online, which is, to be fair, about 70% of every order happens offline. So it happens via a sales rep, or it happens by email or text message or over the phone, what have you. For those guys, the complications arise where if a customer wants to prepay, how do you guys get it? So number one, you've got the payment guarantee. You got the payment in quickly, so you're not allocating stock against a order and then the customer not paying for it, which is a nightmare. Thirdly, how do you let the warehouse know so you can go for fast shipping? Again, this is a solution that we've built, especially for prepayments, but you can do it for basically anything. But if a customer is ordering in one of those methods for prepayments, we give you the ability to either, you can choose to collect and store a credit card on file, or alternatively, you can take the credit card over the phone, and in one go, you can process the order, enter the card, hit go, and that automatically updates with a paid status. You'll get a successful card charge, and that'll come. You'll see a successful note on the screen. The customer is going to get a receipt, and we can set up the warehouse to be added for notifications, and then they'll be able to see as soon as that payment is successful, and then they'll be able to go to ship. And that's a really nice feature directly built into Cin7. So it's inside of where your guys order, and is probably responsible for about 40% of our payments now, Matt. So yeah, it's a significant feature.
Yeah, no, that's great. That's really great. Last question
Awesome.
I've got then about that. Just very, very last question. Is there any difference between the Cin7 products and how that works? I'm assuming 90% of us will be in Cin7 Core, but just for the few that might be in Cin7 Omni, is there any difference in that functionality?
Not so. There's no core difference, but it's just slightly delayed. So the way that the way that we've built it for any Omni users, or anyone that is just using Xero, for example, and they might use a production platform or something like that separately. For any of those guys, as long as you're using Xero, you can basically get the exact same feature. The only difference is it'll be delayed by about a minute or so. But if you can handle that 1 minute delay, you'll be able to get the exact same functionality from a prepaid process, as well as customers that are buying on terms.
Yep. Oh, that's great.
Awesome. Now, guys, do you have any other questions that you wanted to ask? There's still a bunch of you in the event, so feel free to ask them at any point. If not, we could probably wind that up, and I just want to explain to you probably the next steps and kind of where we go from here. So we're going to create a recording of this. This is all recorded. So what we're going to do once this is done, We'll fix up the recording. In a few hours' time, we'll send out an email to all of you. That'll have the recording on it, as well as a couple of links. So you can feel free to book some time in with Matt, or you can book some time in with us, and we can kind of do a joint call. We can either just have a chat with you about your receivables and a couple of strategies to be able to get them down. We're full of good advice. We do this every day with all of our customers. It's the only thing we do. So feel free to ask as much free advice as you want. We're here to jump on those calls. Alternatively, we'd love to give you a demo of our platform and see how it works. And then obviously we'd love to get Matt involved in that. Matt, have you got anything else that you want to kind of wind out with?
Yeah, so just a bit of context, obviously, of I guess our experience and how we've typically done work with the team at Pencil. So um, there's not really any big complications by adding Pencil into a workflow. That's something that I want to point out. So if you've got kind of like a B2C business, and you've got integrations happening over there, and then you've got your B2B business, and you have different processes for that. Pencil seems to fit in pretty nicely to almost any scenario that I can think of. There's not really a big kind of like stop point where any of our clients have ever had to come to us and say, "Oh, hey, we want to put Pencil in, but we're worried that something else is going to break." So yeah, it fits in really nicely. So there's that. Just as I was saying, I can see Sally's asked a question, so
Mm,
so Sally from GT Hoses. Hey, Sally.
mhm.
Yeah, you're already using Pencil. That's great. Keen on knowing some more about the payments over the phone through Pencil.
Yeah, of course, of course. So, hi, Sally. Payments over the phone is something we built in. We probably built it a few months ago. Basically, that one, if a customer calls in, you can obviously process the order. You can or you can call up a customer that is overdue. Inside of Pencil, you can click a button that automatically comes up with credit card fields, and at that stage, you can just plug them in over the phone. At that point, you've got the ability to be able to choose to just process the payment straight away, and or what you can do is click a little button, which tick a little tick box, which also allows you to store the credit card details at that point for the future transactions. Obviously, you ask the customer first, but if they're all good with it, it's a really, really nice way to be able to collect as many credit cards on file as you like, and then to be able to that credit cards on file help you reduce debtors by a significant amount. They help you reduce average debtor days and reduce total debtors significantly.